All right, welcome everyone. This is Bob Mauer. It is Tuesday, the very first day of April, April Fool's Day, around about 1 p.m. my time. I want to do an update of the current seasonal futures spreads strategies. We just have the two that are ongoing, and then also I want to introduce two new ones. So let's hop into the portal here and see where we're at. When in, you'll see the most current PDF version here for this week of 330. And this is what we're working with. Top two rows, we've been in for several weeks since February, mid or late February. And the only one that we're in is the live cattle. So 350 top row there, bear spread, live cattle. And then 351 is the second row. That's the feeder cattle. And that one has not given us a fill yet. So we'll look at that one. I am changing. Let me go back one step. I am modifying the targets, the exits for 350, the fat cattle. So I've got in gray here what's changed. Exit price zones have changed, and then obviously going to change the approximate gain profile. So we'll look at that. Bottom two rows here are new spreads, 352 bear spread in corn and 353 bear spread in lean hogs. So I'll briefly introduce those to you also, and then there'll be a deeper dive that I'll publish hopefully shortly. All right, so let's look at the live cattle. This is the one I just advised, so I want to same page for this. So this is strategy number 350, the bear spread in live cattle. So generally, this thing started on the 18th, broke down through our first two targets way back when, and I wanted to stick with it, see if we can get a decent bounce and then a rotation back to the downside. Instead, we've got more than a decent bounce. This thing actually made new highs. So it took out this previous swing high from the end of January just 3 trading days ago, got to as high as 415. Our stop is at 420. That is pretty darn close to getting stopped out. And then we had a quiet session after that swing high. And then we had 2 days of two pushes lower. So hopefully this continues to move our way. That's all said. I did walk this forward and looked at it. We had just gotten in yesterday, shall we say, to see if there's any probability that we could still hit these targets way down below. I don't believe so. Maybe that could change. But for right now, I want to get a little bit more conservative and raise the target. And it's completely trader's prerogative, but that's going to be my opinion at the moment. So I'm taking target one and moving it up from 117 up to 252. So target one is now going to be 252. And then target two is going from positive 90 to 217 half. This is going to be the new look of this strategy. We'll go 17 to finish the visual. All right. So basically, I'm tightening it up on the target side. I want to keep the stop where it's at right now. Hopefully, I'll feel confident about tightening that stop by the end of the week. But we've seen a pretty darn good rally. And again, it made new swing highs, but didn't find any new buying. So we actually settled below the previous high. See that from the high that we settled on March 27th, or that area that we closed at on March 27th. And then we've seen a pretty good move to the downside for the cattle. So hopefully we've withstood the worst of this basically. The seasonal structure for this tendency is for roundabout this period of time, starting a few days ago, for the spread to start to see some pretty good pressure to the downside. Now, obviously, it's bucked a lot of that already. It's been a pretty fantastic rally, but nonetheless, we've hopefully are going to be sitting in a situation where we can least see these targets, right? And what that'll do ultimately is give some level of realized gain if we get down there for the more aggressive average in traders, and then even the more conservative 325 entry level two traders. So both entry tactics would realize some kind of gain if we get down to 252. Now, if a few days go by and the data and I walk it forward and the data suggests maybe even lower seems likely also, then I'll take these targets and I'll lower them. Right now, it's based on the character of this rally, the fact that several of these little pullbacks have been met with new buying, and the next one would probably take it up to the stop. I want to go ahead and get a little bit more conservative on our exit. So there's the strategy behind the numbers that I posted there. All right. So we will be looking to see how this thing trades. Interestingly, if I were to pull up a chart of the fat cattle, so you see this big break, first big break from say end of January into first part of March, and then the big March rally that we saw. We look at flat price June live cattle future. All right. This was the break. Here's the break. It's the June live cattle futures. This has been the rally. Interestingly, market is this spread is kind of stalled, even with this big bar that we saw up here on the 27th of March. And well, that was when the high was made. And then today we saw a pretty good uptick in the futures markets, but the spread broke lower. Maybe the spread is starting to than the futures. Getting a bit of a pennant here. See how that plays out. But that is kind of interesting, and hopefully the spread has withstood the worst of it. Just put it that way. Okay, so that is the bear spread in live cattle. Both entry levels are filled, and the exits have been tweaked. Here's our feeder cattle, spread number 351. We are not in. Entry up here, only one entry level. Negative 165. Market's basically been dipping, consolidating, and looked like it's ready to take another dip to the downside, probably get to this target one. So I doubt this is going to be doable. I'm going to give it a few days, see if the data still supports trying to get in up at negative 165. But for right now, no fill and change the strategy. And then two new ones to introduce. We've got the bear spread in corn. This is going to be strategy number 352. Excuse me. A live cat corn. Yep. In yellow here, margin requirement 250. So it's long December, short September. We're in the same marketing. Up. Margin requirement about 250. Risk reward levels you see. And then the strategy is going to be to get short. Okay, so this actually started back on the 26th. First entry level was negative 7 cents. We haven't been through that yet, so I'm not going to walk this forward as if are filled. You guys are not in. And then entry level 2 is negative 5.25. Top is negative 3. Then we got our targets there at negative 9.5 and negative 10.75. I'll go into a deeper dive on a separate video. Basically, you see this big push to the downside. The market kind of fell off a cliff. Tariff talk, basically. And also the fact that things have improved quite substantially down in South America in terms of still getting this crop into the ground, planted for the crop, seeing how things play out there. But basically, a big little push to the downside, and we are looking to get on board with this recent trend. So this is going to be a trend following seasonal tendency. Seasonal's in the driver's seat, but we're going with the trend. All right, so that's bear spread number 352 in corn, long D, short SEP. Got our entries, got our exits. All right, and then lean hogger. So in the livestock sector, cattle's And we are looking to get short. So this is going to be spread number 353, lean hog bear spread, long July, short June. So summer months. Margin requirement just shy of 800 bucks. Get your risk reward profile right there in terms of dollar to value. And we are looking to get short only, well, both two entry levels. One is where this got benchmarked. So March 28th is when this actually started. It goes through April 26th. And first entry level was right at the benchmark, negative 77. So if this keeps popping up throughout the afternoon or tomorrow, we'll be able to do a little bit better than that. And entry level two will be negative 7, stops at positive 67, and the targets are down here at negative 172.17. So we want to see a rally and then a break. Kind of a drift downward, generally speaking, for this structure. We had a big little push to the downside here, okay, and then it bounced up. So either call it a range bound or maybe a downward trend. So probably more of a range bound trade where the seasonal lined up with that. Bulk of the red being between say 12 negative 70. So about an 80 point range, which is 320 bucks. Okay, so that's where we're at with this one. Strategy number 353, real brief introduction, lean hog beer spread, long July, short June. Got your entry levels, got your exit levels, both the stop and the targets. Like I said, I'll give you a deeper dive to why I published this one in a separate video. All right, so that should bring everything up to speed. Things are looking a little better for that cattle. Kind of withstood the storm. Hopefully, with the fact that the futures were up today, but the spread was down, that bodes well for us. I tightened up the targets, trader's prerogative on all this stuff. So you feel like you want to see if it'll stretch down to the original targets, so be it. That's your prerogative. Um, Otherwise, you saw where I raised the targets. Hopefully, we can get those. And then I introduced the two new strategies, the corn bear spread and the lean hog. All right, so I think that should bring everybody up to speed. If you have any questions, comments, anything of interest, feel free to reach out to me with whatever method you're happy with or you're comfortable with. And I'm going to leave it there. And thanks so much for watching.